Hey everyone, what's going on? It's Jason here. Today we're going to go over the GameStop saga. As you guys know, Roaring Kitty on YouTube or Deep Effing Value on Reddit, he found a stock that is called GameStop, and he's seen that it was very heavily shorted. So he invested a lot of money into this stock. Well, now, as you guys know, we had the big boom of GameStop, and now he's getting sued apparently from somebody who invested into GameStop, lost a lot of money in the end of it all. And tomorrow is the SEC hearings on GameStop as well. And we'll find out tomorrow what Robinhood and others played a part in this downfall of a stock. If you guys haven't, make sure to hit that thumbs up below. Also, if you're not a sub, hit the sub button. First off, I want to start this off with going over a little overview of what happened. Obviously, you guys know we go back about 6 months back in the summer when Deep Effing Value actually invested into GameStop. It was way back here, way back here at three. It was like $3 to $4 back then, and it came all the way up. He made a lot of posts. He believed in this. Again, this was a heavily shorted stock too. At the end of the day, and these bigger hedge funds were shorting this, and he found that out and seen it, and he believed in this, and made Reddit posts and YouTube videos up on this on GameStop stock, and got a lot of followers and a lot of people believing as well that this could happen. This short squeeze was going to happen, and it did happen. It was definitely hindered though by Robinhood and some others out there, Cash App and others who made it to where you couldn't buy the stock anymore. You could only sell your your GameStop or your AMC stocks, and that really did hurt the overall oomph of these stocks when it comes to the squeeze. The squeeze did, however, get up to over $500 at one point, right? So it was definitely a squeeze, but it definitely could have been way bigger. Right, you can tell right here is when the first day when it got when it got halted by Robinhood, it just had like a downward trend, and the next day, people were able to buy a few, and then it was just you couldn't do anymore. You couldn't buy anymore, so it just plummeted. It went from $514 to now where we sit now at in the after hours at $46.21, which is about a 90% loss and an outcry from where it used to be. And a lot of this is due to hedge funds shorting this again, ladder attacks as well on top of this. And now again, like I said earlier, Roaring Kitty is getting sued by somebody who invested into the stock at a very early stage, actually, and you could have got out in the green, but he kept holding on. It's not really. I don't think it's Roaring Kitty's fault at the end of the day. I don't think it's anybody's fault. I think it's this investor who invested $200,000 and didn't know his pullout game at the end of the day. If he's a real investor, he should have knew the pullout game, right? If he's investing at a low point. We'll go over the article as well. And he invested at a low point. He had plenty of time to get out of this stock and make money, but he didn't. He just held on forever. And I think a lot of that's nobody's fault, but this investor's fault, right? Today in the channel, we had a few people come in and say Roaring Kitty's getting sued. And at first I was thinking, well, what kind of suing is this? This is just like a one person sues another person. At the start, people were saying that he was getting sued by the SEC and government, which I knew that wasn't right, obviously. But I finally found this article today. It says lawsuit alleges Keith Gill, which is Roaring Kitty, is no Robinhood and made out with more than $48 million for himself. I mean, if he made out $40 million for himself, that's good on him, right? That's not a bad thing. This guy should have had a better pullout game. Obviously, at the end of the day, I guess Keith had a better pullout game. It infuriates me to think that somebody's suing somebody because they called out that a stock was getting shorted and that this stock could go big, right? It says one of the principal figures in a group of Reddit investors who drove a huge surge in GameStop shares price in January is being sued in federal court in a class action complaint alleged securities fraud. And that right there it doesn't make sense to me. It's like, oh God, because anybody could say a stock shorted, and if you go put your money into a stock, somebody says that's shorted, and you lose money, that's on you, not somebody else. The lead plaintiff, a Washington State investor, suffered a substantial financial losses when he used $200,000 to make a short selling speculation against GameStop. Well, it wasn't that short because you got in It says he got in when the stock was below $100. Well, I hate to tell you that the stock went up to like $500. It then went skyrocketing to a record closing of $347 on January 27th in a story that caught mainstream media's fascination. Well, guess what? You got under $100. You could have got out at 347 and made a lot of money. That doesn't seem like, Keith's fault. The lawsuit says Keith Gill of Massachusetts, known on Reddit as Deep Effing Value and on YouTube as Roaring Kitty, is a screwed investor, representing himself as an average Joe who beat big time investors at a shady game. I mean, he didn't really like. I don't get this part though. Like, as a shady investor, I mean, I think the shady people there are the hedges that are ripping these stocks down and doing shorts on them. That's the real shady people. He just seen the game and played it, right. The lawsuit says Gill instead made $48 million cashing out from his day job as a licensed trader with the Mass Mutual in Boston. Again, I say good on him. He made a lot of money, right? I don't say bad on him. I mean, he literally has seen a stock that was heavily shorted and told other people about it. This isn't the first time that a heavily shorted stock, went up in price because somebody's seen it. This is the first time that it was such recognition, obviously, and so many people are talking about it. This is not the first time. The individual suing Gill, Christian Lovin, or Ivan, however you say his name, alleges Gill was illegally manipulating GameStop's share price by encouraging his YouTube and Reddit audience to hold their shares of GameStop, causing their price, called a short squeeze, that artificially spiked the price. I mean, that's what happens when you get shorted. When you have these stocks that are heavily shorted over 100%. People buy them and they hold, and the price shoots up. Again, he got out. Remember, this guy Christian, he got into GameStop with he put up $200,000 into it. He bought in at under $100, and he had up to $500 to get out, but he didn't. He's kept holding. But guess what? You lost that game. Nobody else. If you're supposed to be such a good investor, you should have knew how to pull out. Gill, however, is no amateur, says the lawsuit. For years, he actively worked as a professional in the investment and financial industries. He holds extensive security license and qualifications, including a securities principal and supervisor management license and chartered financial analyst license. Indeed, at the time, Gill was inciting the market frenzy with his fake persona. He was licensed by MML as a registered representative, and he's employed by Mass Mutual. Again, it doesn't matter. To me, it doesn't matter, right? Because you got like people like Kathy Woods that call it stocks and they shoot up like crazy. There was a lot of stocks today that shot up like crazy because of Kathy Woods. That doesn't mean she did anything wrong. She just mentioned some good stocks and people buy into them. I don't think seeing a heavily shorted stock and then and telling other people about it is a bad thing. I don't think that's the wrong thing at all. Those people that shorted that stock, shouldn't be able to short that stock so much. You shouldn't be able to short a stock over 100%. You shouldn't be able to short one share over one time, right? You shouldn't be able to short it at all, really. I don't think. That's just me, especially that much. Ivan suit also names Mass Mutual as a defendant and alleged it had a responsibility to supervise and control Gill up to the day he resigned. Ivan does not say what his actual damages were, with short sellers effectively betting the price of the GameStop stock would go down. Their losses spiraled out of control. In one well-known example, hedge fund Melvin Capital needed $2.75 billion infusion of capital when it finally got out of the stock position. Again, these people shouldn't be shorting stocks. And if you yourself, got in on this frenzy, you shouldn't be able to sue him for saying, hey, and calling it out. You should have knew how to pull out sooner. I get that a lot of people don't know what stocks are, but hype stocks are that way. And I kind of say like hype stock in terms of there's a lot of hype around it, right? And that this stock shouldn't be $500, and you should be skeptical of that price, right? Like I wouldn't, pay over $200 for. I didn't go over $200 on GameStop personally, because I just knew it was very volatile at that point. And plus, I could see the writing on the wall as well, because these big people there was stuff going around that people were going to start like stopping from buying and things like that. And that's when I got really scared. And then the next day it actually happened. I didn't think it was going to actually happen, but it did happen, right? And at the end of the day, I don't think you should be able to sue somebody because they found a shorted stock. and then you invested $200,000 into that stock, and then you didn't pull out. He got in on it under $100. It says well below $100. Let's say you got it at 50 bucks. If you would have sold that stock at 347, this guy would have made millions. But guess what? He didn't, and that's his own fault. That's not Key's fault or Roaring Kitty's fault, right? That's on him. Next off, I want to go over this little video right here. This tells about tomorrow, the SEC hearings and things like that. So we'll go that real quick and watch this together.
Got a couple different testimonies out. I want to start with Robinhood CEO Vlad Tenev. He says that Robinhood did not help hedge funds to customers' detriment. We're still looking through Tenev's testimony. We also got one from Reddit trader Keith Gill.
I still think, though, that Robinhood should have had more capital. If that was their excuse, is that they didn't have enough capital. So why are you doing your own funding if you don't have enough capital to secure these backings? You know what I mean? Because they do a lot of in-house stuff at Robinhood. So why didn't they have their own funding yet? Like why I just don't get that part.
Gill, who also goes by Roaring Kitty, he says that the idea that he used social media to promote GameStop stock was preposterous. His channel, he says, was for educational purposes only. He also says that he's an individual investor, not a hedge fund. He says an investment in GameStop and posts on social media were entirely his own. He also still maintains that GameStop is undervalued. He says the company is still dramatically undervalued by the market. Morgan, back to you.
All right, thank you. Leslie, want to get your reaction or your thoughts on what we're getting here in terms of information.
Yeah, that's right, Morgan. So this is the prepared testimony from Melvin Capital's Gabe Plotkin, who will be appearing tomorrow. Tackles a few issues in this prepared testimony. Number one, the idea of short selling. He will say that absolutely none of Melvin's short positions are part of any effort to artificially depress or manipulate downward the price of a stock.
But
and
it is,
nothing
though.
about our short position
is.
prevents a company from achieving its objectives. It is just Melvin's view about whether it will. Also tackles this idea, which was quite controversial at the time of Robinhood's decision and other brokers' decision to limit purchases of certain securities, including GameStop. He will say that Melvin Capital played absolutely no role in those trading platforms' decisions. In fact, Melvin closed out all of its positions in GameStop days before platforms put those limitations in place. And then, if you recall, Melvin Capital, as all of this was unfolding, it received an investment from Citadel and Point72 of $2.75 billion. Gabe Plotkin will address this as well, saying that Melvin Capital was not bailed out in the midst of these events. He says that's contrary to many reports.
Yeah, why did you need $2.75 billion?
Proactively reached out to become a new investor, similar to the investments others make in their fund. The opportunity, in essence, for Citadel to buy low and earn returns for investors. Now, other aspects of the
But why would you need a $2.75 billion, $2.75 billion with a B infusion if you weren't hurting from this, right? He obviously got bailed out, even though he says he didn't get bailed out. We know these hedge funds back each other. So again, they said they did nothing wrong, but why? How can you even? I get that there's no law against over shorting a stock, but I just don't see how you don't think that's at least morally wrong that you over shorted the stock so much that there were you over 100% at shorts on that stock, right? That's just crazy.
Remarks include, the fact that January was very humbling for Plotkin. He mentions his background growing up in a middle-class family in Portland, Maine, that he's married with 4 children, and that his firm Melvin was named after his grandfather, who ran a convenience store. So noting again that, he says he was humbled by what happened in January, that his investors, which include a variety of academic institutions, medical research, and other charitable foundations, also impacted by all of this.
He has to put in his own little love story in there, right? Too. He's like, well, I came from a very poor background and things like. We're not looking to, feel bad for you. You're literally making billions of dollars off shorting stocks, right? Like, we don't feel bad for you at the end of the day. Again, I just think this is all a little bit overblown. Obviously, like Roaring Kitty just seen a stock that was heavily shorted called GameStop, right? Then other people saw other stocks like AMC that was heavily shorted and started that as well. That's just what happens, right? You get these big hype trains going, and then you get different stocks. But at the end of the day, people looking at different stocks and things like that did spread people thin, and that did hurt as well. But Robinhood, being the biggest retail investor platform, right, even in the next one right beside it, Cash App, you know, restricting people from buying it, you know, really did hurt the short squeeze and really did help the hedge funds. So it's hard for me to say that they didn't do that, right? They obviously helped the hedge funds, even if they indirectly or didn't directly help them. They definitely helped them. And again, these hedge funds should not be able to overshort this. There should be a law put in place now where you can't overshort a stock, especially over 100%. It's killing these stocks. I mean, they're pretty much just smothering these companies, right? Was GameStop a $2 stock back in you know, what is it, June or whatever? No, it wasn't a $2 stock. It was just getting shorted to death, and it's bad for companies. It's bad for everybody. This lawsuit is stupid. If that actually works out, then that I have no faith in humanity, because you shouldn't be able to you sue somebody because they said a stock was overshorted. You got in at under, it says well under $100. So he could have made millions off that $200,000, but he's the one that didn't pull out. He's the one that lost now. That's on him, not Roaring Kitty. That's where I'll leave this video, though. I hope you guys enjoyed it. If you guys haven't, make sure to hit the thumbs up below. Also hit that sub button, and I'll see you guys in the next one.